What is going on YouTube? It's Brendan for Market Makers. What a wild and crazy week. Guys, I want to get you set up for the next trading week. Of course, we will have the Sunday kickoff show. I didn't do a video last night because I wanted to see what the PCE inflation was this morning when it came out. So let's recap the news this week and let's get into the chart so you can see where everything stands. So this week, guys, was a monumental week in the markets. It was Q3 earnings for big tech. Big tech finally showed weakness, okay? It took to the Q3 to see some weakness. Look on my screen. Amazon dropped 20%, notwithstanding today's rally. Amazon was trading at 121, dropped below $100. Meta was the big casualty, formerly known as Facebook, dropping over 25%. Meta was a top 5 market cap stock. It is now not even in the top 25. Zuckerberg himself has lost over 100 billion with a B dollars of personal wealth. This is all due to their investment in the metaverse, the spending they're doing in the metaverse. They've spent more money than it took to start up Tesla. That's how much money is dumped into the metaverse. And if you guys have seen the graphics, you can go ahead and Google it, but it looks embarrassingly amateurish. So a lot of investors not happy with the course that Meta is going on. Microsoft sold off, Google sold off, ad spending is slowing. That's slowing on YouTube as well. Everything's slowing down. The last Mohican was Apple. Apple held reasonably well. It was down 5% in futures, rebounded. But the big thing was this softening of big tech, because this is Q3. The earnings were revised for Q3, and you're going to see the earnings get weaker in Q1, Q2 next year. Next year, at some point in 2023, you will have the full-blown recession. Again, why do we say that, guys? Because over the last 80 years, 9 times inflation's been above 5%. All 9 times you had a recession. The average drawdown of the S&P in a recession is 35%. The S&P's down currently 21%. So even if we don't have this bubble type pop that I've been predicting, that a lot of people have been predicting, you're still going down a lot further in the marketplace, but it takes time to unwind. And right now we are dealing with a bear market rally once again. So we're going to look through our charts, including in crypto, look at the targets. Guys, we have a lot of things driving this rally. This is a sentiment driven rally, meaning there's no positive data points other than the magic GDP flipping from 2 quarters negative to a quarter positive right in time for midterms. Midterm elections in the U.S., November 8th, the GDP flipped positive. The Biden administration's been dumping tens of millions of barrels of oil from the strategic reserve on the marketplace to artificially keep low the price of oil. This is all done for the election. This is a midterm phenomenon. It happens quite often. You can Google it and research it regardless of who is in power, but this is what happens around this time of year. And then, of course, you have that seasonality of potentially forming a Santa Claus rally, but I will be looking for trend exhaustion of where I will be putting in some big shorts back into the marketplace, because I don't see any positive data points to show the market has reason to continue to go up based on the economy, based on the macro picture in the world, the UK going into recession, Europe going into recession, China going into recession, and the US going into recession. I predict all of this will be getting worse. So let's go ahead and click through some charts and see what we got. We're going to look at cryptos today too, guys, but let's go ahead and start on the TNX. This is a 10-year. Looking at the 10-year, we're above 4% still, but we are off of our high. Again, all because of that Nick Timmerose, the Fed Whisperer article about Powell may be having some softer language, some dovish language, or may potentially pause. I forgot to mention, we have the Fed meeting next week. The Fed meets November 1st and 2nd. November 2nd is when Powell puts in what's predicted to be the 75 basis point hike, as well as gives guidance to what they see in the marketplace and what they may or may not continue to do going forward. Obviously, Wall Street wants him to pause or have some dovish language around pausing. Very important for them because they want to get this rally going. But as you guys know, if you're fighting inflation, you can't have markets running wild. And the reason that the Fed rate hikes are not working at the moment There's actually two reasons. One, because there's a severe lag. They take 9 months to a year to actually kick in the marketplace. But what are they doing? They're intentionally slowing down the economy. They're going to create unemployment. They're going to create consumers spending less money. But the other thing that they have to deal with, which nobody even talks about in the media, is the uncontrolled spending from the administration. Because why is inflation caused in the first place? By inflating the money supply, the money printing, fighting a proxy war overseas, spending $1 trillion on student debt relief, spending, including the anti-inflation bill, which is really just a Build Back Better plan with a fancy name, has nothing to do with fighting inflation. You can't fight inflation by printing money. So you have to deal with the administration spending money. At the same time, you got to raise rate hikes. At the same time, you can't let the market go crazy, but then he's getting political pressure to let the market go up prior to the midterm election cycle. So when you look at the dollar crossed back above 110. Again, when that 75 basis points comes in, I expect this to come back up. Remember, we got to 121 in Y2K. So far, we've got to 114 here in this current bubble cycle. We don't have to get to 121. You can stay elevated like this. This hurts the equities markets. This hurts our global trading partners. This is actually bad in a lot of ways. It's good for the American consumer dealing with inflation on imported goods, but overall, this is bad for trading purposes, okay? This hurts everybody else. But if we go ahead and click through this, let's look and see where we're at. If we look just at the S&P, guys, what everybody wants in the marketplace, the money managers, the portfolio managers, the asset managers, this is what they're hoping for. We came below the 200, 233. They want this move, okay? They want this 15, 18% move back up. But this is my prediction of what will happen afterwards, like it happened in 2008. We're going to come up, we're going to fade this rally, and then it's going to decline deeper than the previous low, okay? That's what I think is going to happen in the marketplace. When you look at where the S&P is right now, 38.97, you can see it pumping up. It shook off the big tech earnings. Remember, these are the top stocks in the stock market, and some of them sold off massively. I mean, just a few months ago, if you would have told me, hey, Brendan, Amazon's going to drop 20%, Meta's going to drop 25, 30%, Microsoft's going to be down 10%, Apple will be down 5% in futures, what do you think the market's going to do? I would tell you the market's going to be red, but the market wants to rally, a sentiment-driven rally. So we need to look at resistances. Here on the weekly time frame for the S&P, remember this is the broader market, looking at the 618, 39.14, you got to flip that. The target you're really paying attention to on the weekly is the weekly 50, okay, the simple moving average. Remember, half the indices are bought by bots, okay, the robot, algorithmic buying. Below the 50s, bearish on the weekly, above the 50s, bullish. I don't think you're getting above the 50. Let's zoom into the daily. Daily, you got above the 50 here. You're pumping up. The target you need to watch for on the daily on all the indices is the 200 and 233, okay? Because when you hit this, you can get massive trades. Remember, we shorted this. We talked about this on the YouTube channel. I personally shorted the Russell, but the S&P as well. The S&P went down 19.33% from where it kissed the 200. If we pump back up, I want to look for some sort signs of a top being made. I have the 0.5 fib here going across from the fib fan. I have the 200, the 233. This quadrant is where I'm going to be looking for us to build out a top potentially. And then let's go ahead and click through the S&P on the 8-hour. You can see you're approaching the 8-hour 200 as well. And let's go ahead and go to the NASDAQ. NASDAQ on the daily. NASDAQ struggling a lot more than the S&P because, again, these are tech stocks. They're weighing down on the NASDAQ. But if we do a couple of things here, let's just look at, you have the 200, 233 over here on the NASDAQ. That's at 12,836, okay? Keep these on your chart because, again, you need to flip the 50 first of all. You got to flip the 50. You got to come up if you're going to contact the 200, 233. We'll see what happens. Again, Powell has the ability to really extend this rally and push this rally up, but he also has the ability to send it crashing down if he comes out very hawkish because, again, PCE, the inflation the Fed tracks, came in spot 5% hotter month over month, but it was as expected, okay? But that still shows month over month inflation acceleration. So let's see what he does. Will he go to fight inflation, or is it going to yield to political pressure and come off a little bit dovish so the market rally can continue into the election? If we throw a trend-based fib on here, let's just go ahead and do this really quick. Throw a trend-based fib here on the daily time frame. You can see I have the 1618 right here at the 50-day moving average at 11,782. That's just measuring this double bottom type structure. But remember, your next target is going to be the 200, 233. That's what you really need to watch, because again, this gives you big trade setups on daily time frames, just like up here. You see this going further back. We posted a trade short the NASDAQ here at the 200. We talked about it on the channel. You built a double top here. This is a 200 on the daily. Over here's a 200 on the daily. You can see you captured this big decline, captured this massive decline. These are big trades in a primary downtrend market, okay? Let's go ahead and look at the Russell on the weekly time frame. If you look at the Russell is pumping up, okay? We have the 618 at 1877. The 50 weekly is up here at about 1943. So the Russell is outperforming the other indices as far as getting to its resistances first, the small caps, okay? We were below the 300-day moving average for a month. 4 weekly candle closes, pumped up above it, got rejected by the 200, 233, and now we're pumping back up once again. If we go look at this on the daily time frame, again, the area that I'm looking at here because of where we're at, the 200-day moving average laying right on the 618 at 1877. I want to see some type of top get built here, but again, this is one of the shorts that I talked about here on the channel. We post it in our room, guys. If you want to trade with us, if you want to come for education and learning, definitely check out the Discord. The join button right underneath this video, it says the word join. It's integrated into YouTube, but I love to see you guys there. We have 2 types of people that join. A couple of you guys keep asking, well, is it just trade signals? Is it just education? What is it? It's everything. I mean, look, you can just look at what traders post, what other members post in our room, or you can actually educate yourself using the techniques that we teach in the room to become a better trader yourself, which is what I would recommend for financial freedom. But on top of that, we got a lot of guys that have been there since the inception when we started last June, when we had less than, 30 people when we originally started our Discord, and now there's over 12,000 people. A lot of people stay because it is a fun place to be. We have great conversations about markets, about life, and it is a place that you can get feedback on what you're seeing in the market, see what other people are seeing, and it's the common thread. We have people from 30 different countries in the room. The common thread is everybody wants financial freedom. So you can check that out with the join button there underneath the YouTube, okay? So again, this is a 200. This is the big drop that we had on the Russell. We pumped above the 200. We may do the same thing where we pump above it and then retrace back down. But again, 19.42%, okay? Massive trade, massive drop. So this is what I'm looking at here at 1877 to see if the Russell can get up there. And then looking here on the 8-hour, pumping through, we had right here, we had our, one of the Discord alerts. We had the pitchfork that I laid out here pumping above the 8-hour 200. So let's go ahead and fast forward to Bitcoin weekly pattern, the Dante's Descent. So this is the candle before the candle for the bottoming pattern. Okay, remember, this is a bottoming pattern, not a price sensitive pattern. So this is going to be interesting to see what happens. As of right now, Bitcoin is at 20,600. It's not pumping as hard as the markets. Remember, Bitcoin has gone up, but all year long, it was moving at a 2x to the NASDAQ, okay? So it was moving at a 2x. So it's really not pumping that high yet. We'll see if Bitcoin gets its motor running. We're going to zoom into the smaller time frames. But after this candle close, and the next week's candle is going to be crucial. You got the Fed meeting. You got a lot of things going on. That could be an action-packed candle to see where this goes, if it's going to turn back around and go to a certain level, go down, or if it's going to continue back up and look for resistance on the weekly time frame. If we zoom in here on the weekly, guys, if we use a trend-based fib, doing this wave pattern, And let's see what we got here. So you're just now getting to the 382 at 21,074. You see that? You wicked it. You came back down. The 618 is at 22,879. The 1 fib's at 25.8. I mean, again, you haven't defeated the previous swing high here on the weekly, which is basically 22,879. So I'm not too excited about any of this yet. We've been posting trades here for longs and shorts in the room, but I'm not too excited about this price action yet. I really think you got to have a strong rally, sustained rally in the equities to really move Bitcoin, specifically in the Russell, specifically in the NASDAQ. And we'll see what level this gets to, but where it goes, trust me, there's going to be a big short opportunity coming for Bitcoin as well as the equities. Guys, and if you want to trade the equities, check out SimpleFX, our sponsor. They bring you this video as well as BITGET. The links are in the video description. BITGET for all the cryptos. SimpleFX, we have a fantastic bonus deal with them up to $5,000. That is instant. Instructions, everything in the video description on this YouTube video, okay? They are long-term sponsors. That's who brings you this content, these two sponsors. So if you like the content, definitely like and subscribe and check out our sponsors. Help support the channel. And let's go ahead and go to Bitcoin on the daily time frame. Daily time frame, you can see I laid out a fib fan from our previous swing high, getting rejected here on the 0.5, and we're building a little bit of a top here. We'll see if we can break out. Again, prices right now just at 20,586. You know, you got to get this upward momentum. You got to really break out. You're still towards the mid quadrant here of your Wyckoff trading range that you've been stuck in. So we need to see if Bitcoin can get that upwards momentum to really get going. But I don't think unless the indices really break out and show a lot of strength that you will get that. But a lot of that's going to be predicated, I'm telling you, on what Powell says. You know, this is the first time really trading that I've had to pay so much attention to the macro factors because of where we are in the market cycle, because we're in this heavy political slash world macro cycle with conflict, with recessions, with global rate hikes, global inflation. I mean, this is the first time in my lifetime, especially as a trader in the last 20 years, that I can remember anything like this. So we have winter time coming, lots of seasonality effects, lots of political effects. I mean, the UK itself is on its, third prime minister in like 3 or 4 months. So there's a lot of different things happening in the marketplace, and you don't always see them in the candles because they're events that are happening in real time, okay? So this is something that I'm watching Bitcoin to see if we can break out above this 0.5. And again, you know, if you lay out your, because someone's going to ask me in the comments, if you lay this out, guys, your Fibonacci fan, you can just throw it on that swing high and go to your deepest retracement, your swing low, and it'll lay out these fibs this way, okay? So you can see the fibs in a different type direction. But let's go ahead and move forward to the smaller time frame. Smaller time frame on the 8-hour, you can see this as well. 8-hour time frame, we got up to the 21,014, as you can see here. We wicked it a couple times, fell back down. One thing you want to look out for is to see if you do end up coming up for a double top, right? We're jamming in here on the 8-hour 233. We're above the 200, but you want to watch this shape as Bitcoin comes up. If it starts selling off, making that shape, because we are above, you know, the bottom range here of the Wyckoff. If you have your neckline and you come down, you could break back down. But, you know, we'll see what happens again on Monday, Tuesday. It's going to be big days for the Fed for sure. Bitcoin here on the 4-hour time frame did a tighter wave projection here, as you can see, and you can see you pumped up, and again, you're doing that double top type structure. If we erase this and we do a larger wave projection like we have on the larger time frames, we can do it like this. Go to that 17.5 bottom there, right about there. Go to your swing high, right about there. Then come down to your swing low, and right there, and see where we get to. Again, you're just getting to the 382, okay? So the 382 at 21,040, the 0.5 at 21,949, the 618 at 22,858. So we're still in the bottom tranche here as far as the fib wave is concerned. But on the 4-hour, you're above the 200, above the 233. We'll see if Bitcoin can keep making progress. But again, just watch that shape, okay? watch this shape, because as you come back up, if you fail again, you're just making a double top, okay? If you retrace back down, and then you got to hold that neckline. You want to come up, remember, hold up, make some type of cup type pattern, a pivot pattern, and break out to the upside, and then roll over and do it again, or else you just do this. Right? You just do that, you break down, and you got to start the process all over again. So let's see what we have here. Bitcoin on the 1 hour. 1 hour, you can see the double top shape here as well. Okay, and you can see Bitcoin's failing a little bit lower level than previously. Looking at Ethereum, Ethereum also pumped up, but Ethereum's making the same shape as Bitcoin. No surprise here. You want to watch and see if you end up getting a double top here. Ethereum's at 1553. And you're above the 200, the 233 here on the 4-hour time frame. So another thing you can do here, you can grab a fib retracement. Let's take that swing high there, go down to that swing low, and see where Ethereum got to on this fib retracement. And you got just above the 618 at 1550, got rejected at 1569, which is a 786, okay? But again, this is forming a pretty clean double top. You're getting supply dumped on this candle right now. It's just one candle. We'll see what happens with the momentum. Looking at the money flow is still positive, but it is definitely on the downtrend. So if this starts rolling over, making peaks and then coming down, just watch this, okay? Because again, it's going to do that if Bitcoin does it. XRP declined sharper, but then it's still between the 200 and 233 here on the daily time frame. A lot of sideways accumulation action. This isn't bad. This isn't good either. I mean, really, it's just neutral. You are in the top of this Wyckoff trading range, but you haven't been able to break out yet. So if you do break out, you're trading at 46 cents, almost 47 cents. You want to look at the 618, which is just roughly about just a hair under 50 cents. Then you have the 1 fib at 54. If you did get some type of breakout, some type of continuation pump in the equities and the crypto space, look for 1618 at 61 cents, okay? And that's a ways up. But what we could see is a breakout, come back, hold that as support, breakout, come back, hold that as support, and keep moving up, okay? If not, you're going to end up forming some type of shape here, a double top, a head and shoulders, something will form. But right now, you got a very, very tight daily range here for candles, very tight range. We got to see which way this is going to break. And if we go ahead and look at gold, of course, here's a 200 moving average on a 4-hour time frame. Gold came back up, retested that 1672, which is your long-term support, now resistance, and gold made a double top, just like it did here. Okay, gold made a double top. It's breaking down a little bit. So this, again, my gold prediction was 1425. If the Fed keeps raising rates, which I do believe they will, so if they do keep raising rates, the dollar will remain strong and possibly rise higher, and this will be bad for the metals. Eventually, the metals are going to be the assets to own. So look forward to that. Silver went ahead and threw a parabolic arc on here, but you're at support right now. Silver pumped up from its base as well, getting rejected at 19.66, currently trading at 19.26. So now you're down below the 382, okay? So you made a double top here in silver as well, fell down, bounced off your arc. Going to see if you can hold this range and move back up, or if you're going to break through it and start declining. Your base is substantially further down here at about $17.94, $18 in this range. So if silver starts failing and maybe coming back down to I guess consolidate down in this base range, okay? So just watch that for silver. Oil's still holding this mid-range. It did start going sideways and stopped declining, so it broke that primary downtrend. Now it's just going sideways, and you're at 88.66. Once again, when that strategic reserve is exhausted as far as not being dumped on the market anymore, which will happen after midterms, you could see oil spike back up somewhere in this range, somewhere between 95, 105, in that range, but you got to get above your 300 and your 200-day moving average, okay, and get back into this Wyckoff trading range. Even in this lower tranche, this is in a very expensive oil point with winter coming, and that's what everybody is afraid of. So guys, I hope you enjoyed this video. I hope you have a fantastic weekend. Definitely like and subscribe. I'll answer your comments as always, and guys, look forward to trading with you on Sunday for the Sunday kickoff show. We're going to review and preview the markets and what the expectations are. And all right, guys, take it easy. Good night and good luck, everybody.